I'll hand it over to Neil Young, MD of Elixir Energy.
Thanks for the introduction, and I think quite hard to follow Rob. I'm not sure I can match the political correctness there, and but so as a gas person, I actually blend a bit of green hydrogen as well. So I'll talk about that in the Elixir story. Okay, so firstly, just an introduction to the company. So we have 3 projects. The foundation one is natural gas in the form of coal bed methane. In Mongolia, we have a very large asset. We own 100% of it. Located next to China, i.e. the world's largest energy importer, and location drove my decision to go to Mongolia more than 12 years ago to ultimately acquire that asset and backdoor it into Elixir in the end of 2018. We've got a great team, and we've been hopefully transmitting skills to the country, and been pleasing to see that various ASX companies have now followed us in, which we think is validation of the play. Our second Mongolian project, the Gobi H2 Green Hydrogen one, is also driven by location, even more so. Our view is that location is the fundamental driver of success for hydrogen projects. There we have a very high quality Japanese partner, and I'll talk a bit more about them later. Last year we acquired 100% interest in a large gas block in Queensland, again driven by location in 2 respects. Firstly, in Queensland itself, it's very close to infrastructure. Secondly, post the initiation of the war, value of gas in Australia become higher because of its security of supply. If you were Shell or BP, you'd been in Russia for 30 years, and then within a day you lost $30 billion. If you're a Japanese gas buyer, gas from Australia is more secure than gas from the likes of Russia. So again, location being key. So here's a quick summary of the company. We've about 900 million shares on issue. Our cash position is reasonable. We don't have a lot of paper hanging out there other than ordinary shares. In terms of the team, we're led by Richard Coddy as chairman, very well known in Queensland for the fabulous success that was QGC about 10 years ago. Then myself, MD, I've worked in Santos. My background is commercial. I've been in small cap land for a while. Thirdly, again, a Queenslander, Stephen Kellerman. He was at Santos for about 40 years. He founded their coal seam gas business. I worked with him building up the company's position in that back about 15 years ago. Our most recent director appointment was Anna Sloboda, came from a finance background similar to Mongolia, grew up in Belarus, the ex-part of the USSR, has worked in China and in resource stocks. So the first project I'll talk about is our Queensland one. It's the most recently acquired one, and of course I'm in a Queensland audience here. We've called it Grandis for the numerous Latin speakers in the room. That means big. It's a big asset. It's got a big resource, big upside. So location, as I mentioned, superb, near to the Wallumbilla gas hub. That's the primary commercial and infrastructure gas hub in Australia. It's only about 50 k's away from there. It's a large block. It's about 1,000 square kilometres. It's connected to domestic markets, which, as were just mentioned, are short and rapidly becoming shorter. Connected to international markets through the LNG facilities at Gladstone, which have increasingly spare capacity. And as I mentioned earlier, the demand for gas from safe locations like Australia has gone up. Interestingly, this is the centre of CCS, it's carbon capture and storage in Queensland. That's a growing industry. In this location, Glencore have an asset, and there's another licence about to be granted to a large party that we're talking to about data and cost sharing. And a bit of an aside, but the co-location of methane and CCS pore space is exceedingly advantageous for blue hydrogen production, which could well be something that comes up in the future. This location here is accessible by road. It's near the service sector that exists in Queensland, based in Toowoomba primarily, and accordingly mobilisation costs, etc., for drilling rigs are very low. This is an established oil and gas province. The Mooney oil field was discovered here more than 60 years ago. And when you find that people have been working with oil and gas for decades, they realize it's not some horrible ogre. It in fact provides jobs and it's pretty unobtrusive. The gas in this region is low in carbon dioxide. We think that's fundamental for new developments. And indeed, companies like Shell, who have positions here, see that as a screening criteria for any project that they would get involved in. So we booked contingent resources based on the work that Shell's predecessor, BG Group, did here. About 10 years ago, they spent $300 million exploring the Taroom Trough. Since then, Shell's warehoused it and are now coming back imminently to pursue further drilling work. 400 BCF of 2C discovered resource, pretty significant number in any sort of sense. What that means is that our well that we will plan to drill at the end of this year is an appraisal well, not an exploration well, with a risk profile that is accordingly much less. So upcoming regional activity, we see from this map on this slide that there's us in the middle, there's Santos and Shell in a block to our south, there's Shell to the west and to the north, and as I mentioned earlier, these large operators plan work programs in the short term. There are also some smaller companies doing work, and that is great in terms of news flow. Genuine neurology, to use a not particularly accurate geological word, and also integration of service sector. That is, when other companies hire rigs, we are in negotiations to hire the same rig as part of an integrated program. It means that costs are less and risks are lower. So Daydream 2 is an appraisal well. We plan to drill it around the end of this year. The timing's not set until we see how other people go in terms of how quickly they drill. We will see news flow building up throughout the year. We expect shareholder interest to rise through that period of time, as is typically the case in high-impact wells. The risk profile is I mentioned, that of an appraisal well, but the upside is that of an exploration well. We see the contingent resource booking being capable of being doubled as we attack different formations through fracture stimulation compared to what BG Group has done before. We will validate the liquids content, which could well be quite high as well, and also confirm the low CO2 content, which we think is a pretty low risk. So moving to our foundation asset, the Nomgon coalbed methane production sharing contract, 30,000 square kilometers in the south of Mongolia, just north of the Chinese border. It's an asset that we've been now exploring and appraising on for around 4 years. We've assembled a team in Mongolia capable of prosecuting that program. And there's something which happened in the last few years, which thankfully we've all forgotten about. It's called COVID. But it meant for 2 years we couldn't go there, but the team still managed to operate and prosecute a program through that difficult time. Most recently, our exploration and appraisal program has matured into an extended production test, and we are pleased to announce a flow rate of 200,000 cubic feet per day. So moving on to that test, we are conducting it over an approximate 6-month period. That allows us time to undertake workovers, change pumps, confirm pressure build-ups, work through monitoring wells to see how the communication is working, measure water, gas composition, etc. What we would aim to do, obviously, is prove commerciality at the end of that period. And we think we're well on the way to that. Commerciality isn't measured just by a simple metric such as what your flow rate is. There's in effect a matrix here that is what's your well costs in the long term, and these are shallow vertical wells. Those costs will be low. And Mongolia is a low-cost environment compared to places like Australia. Secondly, there's what gas prices you expect to receive, and we think they'll be high in this region. And then there's obviously the actual shape of your gas production curve over time. And I illustrate on this picture here, we compare this to a location in China to the south, where we see that the profile is distinctly not as appetizing, that there was water flowing for a considerable period before gas breakthrough took place, whereas the particular geology we faced saw gas coming through really within a day or so of flowing commencing. So this year we'll finish that pilot. We'll go through the government processes that follow a commerciality declaration. We'll work through various marketing options, which are multiple in this region, and we'll prosecute an exploration and appraisal program in tandem, which we can ramp up and hopefully add another pilot location through the course of the year. So moving to Gobi H2, we think Mongolia is exceptionally well placed to support a green hydrogen export industry. It has exceptional renewable resources, and it's close to the world's largest energy importer and the world's largest importer of coking coal. And we think that one of the most likely uses for hydrogen in the future is to replace coking coal. So again, location here we see Inner Mongolia, the Chinese province here. That produces more steel than Australia by a long way. China itself produces about half the world's steel, and the replacement of even a tiny amount of the coking coal, which currently feeds that industry by hydrogen, would create enormous demand. We have conducted analysis through a firm called Rystad that indicates in the long term China will need to import hydrogen. And if it does, there is no better placed than Mongolia to do it. Indeed, Mongolia is better placed than Western China itself in terms of location. So banging on about location here is really driven by the physics of hydrogen. Rendering it into a form that is transportable is very, very expensive. To put it into context, to move a gigajoule of methane from Queensland to China costs you about $4 or $5. To move the same amount of energy in the form of hydrogen from Australia to China will cost you $20. Now, if you're in Mongolia and you're delivering hydrogen by pipe, and there are hydrogen pipelines being built in China, it's not a technically new development, that's going to cost you about $2. So you can see a massive, massive cost advantage there. The second advantage is the quality of your renewable resources, and we haven't come across anywhere else as good as these. The wind is fabulous and the sun is pretty good, and the two complement each other very well. So partnering with SB Energy, that currently is a 100% subsidiary of Japan's SoftBank Group. Now, as measured by Forbes, that's Japan's second largest company. They're in the course of a transaction to sell down the energy asset, which is not only in Mongolia but Japan itself, to Toyota Tsusho, who's obviously Toyota's trading house, also one of the owners of the largest renewable energy fleet in the world, including in Australia. As I'm sure all of you know who've worked in resources, we all want Japanese as partners. Very hard to get. They don't make decisions lightly, and we're incredibly pleased to be working with SB Energy. We've moved from MOU to a term sheet that provides a framework for negotiating an incorporated joint venture, which we would aim to enter into later this year, contemporaneously with entering into FEED for a pilot project. Pilot projects, another advantage of hydrogen here, allows us to demonstrate to customers, financiers, other stakeholders that this actually works in a scalable sense. Whereas if you're looking at a marine export project, you're basically big or you're nothing. So again, we think a great advantage of this location. So in summary, we've got a pretty exciting 2023 coming up. At the end of this year, the Daydream 2 well can be an absolute company maker. We think it could deliver superb high-impact results for relatively low risk for our shareholders. Our CBM well is flowing at a rate which we think is very attractive to date. We'll run through the rest of our pilot and then work through, in a success case, the processes involved with government to turn that into a production area. Our balance sheet is strong. Our gas assets are 100% owned. That gives us enormous optionality in terms of bringing in partners. Our team is pretty good. I ran through the credentials of the board. The Mongolian team I've been working with over various lengths of time, but the oldest ones for a dozen years. That builds enormous trust and is very valuable when working in a developing nation. Now, the Ukraine war and highlighted the value of security of supply, whether you're a Japanese gas buyer who wants to buy gas from Australia, or indeed whether you're a Chinese hydrogen buyer who doesn't want to be beholden to hydrogen being delivered by boat. Our partnership with SB Energy, we think, is validation of the hydrogen strategy. A company like that doesn't come in and stay in and move from MOU to term sheet lightly. And we very much look forward to prosecuting that partnership into its next stage later this year. So I seem to have got my timing incredibly good. If this was 007, I'd be pressing the nuclear button by now. So thanks very much. And I'm around the booth later.
Thanks, Neil. Fantastic projects there. Next up, we have